What's up, effortless investors, and welcome back to the channel. As always, in these portfolio updates, I'm diving into exactly what my dividend portfolio paid me in August 2025. I'll also be comparing the growth and the dividend income from August this year to August 2024, and I'll be covering which assets performed best and worst this month. If you want to skip straight to the dividend breakdown, as always, feel free to use the timestamps in the description. Now, I'm not a financial advisor, just a simple 9-to-5 guy with a realistic investing portfolio that I contribute to effortlessly. If you like this type of content, make sure you like the video and subscribe for more content and portfolio updates. But that's enough of my rambling. Let's get into it. So, let's start with the big picture. The portfolio is sitting at just over £1,724. Slowly but surely, it's growing. Just like that beard you swore you'd shave off during COVID, but now it's become a part of your identity. The steady growth this month equates to 0.7% or £12.36 in unrealised gains. I deposited £110 into the portfolio this month, which takes my total net deposits to £1,450. Looking at the total unrealised profit and loss for the portfolio, you can see that I'm at a gain of 17.61% or an unrealised profit of just over £258. I'm still keeping things diversified between my growth and income pies, so I've got a little balance between the future millionaire bets and the pay me now dividends. If we compare the growth to August 2024, it's actually about the same, with only a 0.4% difference. You can also see that my average yearly return is currently sitting at 15.26%, keeping well above my conservative estimate of 7% annually. Moving on to the EI growth pie, the Sunday roast of my portfolio. It's simple, comforting, warm, and designed for steady growth. Yeah, that analogy didn't really work, but I'm sticking with it. Essentially, if you're new to the channel, this is where the bulk of my investment goes, with £65 of the £110 deposited this month being invested into this pie. The pie is still split 70-30 between VWRL and EQQQ respectively. This month, the growth pie is up a steady 0.9% for an unrealised profit of £9.30. Overall, though, the total gain for this pie sits at 25.4% or £91.34 in unrealised profit. If we take a look at the assets individually, starting with VWRL, it has gained 0.92% in the last month, continuing its nice recovery over the last few months from the beginning of the year. For me, its total gain is currently at 7.95%, which sits just above the average annual target of 7%. Moving on to the smaller portion of this pie, but by no means least, EQQQ. It has had the bare minimum of gains at 0.01%, with a total return for me so far of 12.16%. EQQQ is a bit more aggressive in its growth approach, as it consists mainly of tech stocks. So it's going to be a bit more volatile than VWRL, but I would expect EQQQ to outperform VWRL in the long term. There were no dividends for either asset this month, so you can see that the total dividends gained still sits at £5.16. Hey, look at that. 2 people are copying this pie. Not sure when that happened, as I've not really looked at that before, but if you're one of those 2 people, thank you. If you're not, and you'd like to check it out, I'll leave a link in the description for you. Now moving on to the EI income pie, think of it as the Red Bull to my Sunday roast growth pie, because dividends make us feel like we can fly. That analogy also didn't work. Powering through, this pie is built for passive income with dividend reliability in mind, along with some minor growth, because even dividend investors deserve capital appreciation too. If we have a look at the growth first, we can see that the income pie has produced a nice gain of 1.1%, which for the second month in a row means it has beaten the growth pie for growth. Overall, though, the growth for this pie sits at 14%, or a total unrealised profit of just over £21.65. Taking a look at the individual assets this month, starting with JGGI, you can see it's hit a loss this month of 0.87%, taking it to a total return of 6.01%, which is not bad considering I only invested in it back in April. The second of the big players, VHYL, has thankfully had a better month at 1.67% gain, overall taking it to a gain of 6.12%. In total, these two assets equate to 50% of the investment in this pie, so their growth performance is more important than the smaller weighted assets in this pie. So it's good to see them performing overall. With regards to the rest of the assets in this pie, I've seen some good growth from AstraZeneca as it's grown by 5.84% this month. BAE unfortunately has dropped this month with a loss of 2.97%. British American Tobacco has been another strong performer, growing by 5.39% as well. JEIP, JEGP have both lost just over 1% this month, with JEQP pretty much holding its price for the month. They are mainly in this pie for monthly dividend income, so I'm not too concerned about their overall growth. Legal & General had a down month at a loss of 1.29%. Main Street Capital continues to grow steadily with a gain of 2.33% this month. National Grid has gained slightly with 0.38% in the last month. And finally, Unilever has grown nicely at 4.02%. If you want to know which of them paid a dividend this month, I'll be getting to that shortly. Now though, on to the individual stocks, starting with Palantir. This one's still in my portfolio because I think it has the potential to be a long-term winner. They're knee-deep in AI, government contracts, and data, basically all the buzzwords you need for tech hype in 2025. This month, the price chart looks like it was drawn by a toddler with a crayon, but still some minor growth of 0.99%, taking the total return for this asset to 128% or £136 in unrealized profit, which is just over 50% of the overall unrealized profit for my portfolio. Next up, I have ARKK, Cathie Wood's flagship fund. Owning this is like having a little slice of a sci-fi future portfolio. Tesla, Roku, CRISPR, all the names that pop up when people use the buzzwords like disruption. Now, this month ARKK has had more ups and downs than your average theme park ride, but I'm keeping it in here because it gives me exposure to innovation without me having to pick every single company myself. As you can see, it is a bit of a volatile month, but a steady gain of 2.02%, taking its total return to 6.88%. I'm going to keep pound cost averaging to this asset for now, as I do think in the next 10 years this fund has the potential to grow aggressively. At present, I'm investing about £10 a month into it. On to Nintendo. While other tech firms chase AI and blockchain, Nintendo just has to release another Mario game and suddenly everyone gets excited and throws money at them. But in terms of numbers, you can see there has been some nice growth this month, taking the total return for my small investment to 11.58%. Finally, let's talk about Rigetti Computing. This is my tiny speculative position in quantum computing. Now, will quantum computers be everywhere tomorrow? Absolutely not. But in 10 years, they could be the backbone of everything from cryptography to drug discovery. It's been a very good month for Rigetti Computing with a gain of just under 15%, moving the total return for this asset to just under 89%. And now the juicy bit. Dividends. This month, I got paid by a few companies in the income pie. And while the total isn't life-changing yet, it's still proof that the strategy works. Every pound gets reinvested, which means more dividends in the future. It's the financial equivalent of planting an oak tree today so that one day you can sit under it with a cold pint, patient, steady, and worth it. So, starting with the smallest dividend this month, which was from Main Street Capital at 6p, closely followed by JEGP at 8p and JEIP at 10p. JEQP continues to outperform its counterparts with 12p this month. I received my second dividend from British American Tobacco, which has almost doubled since May to 21p. Rounding out the dividends for this month was SMIF with a nice 27p, which is an increase of 68% when compared with this dividend from last month. So this month, which is August 2025, I received dividends totaling a whopping 84 pence. Now, compared to the last 2 months, that seems quite low. But that's to be expected, as the bulk of my dividend paying investments are within 4 ETFs, namely VWRL, EQQQ, JGGI, and VHYL. They are going to dictate which months have larger payouts, and this month is a month where none of them paid out. Next month, I'm expecting payouts from JGGI and EQQQ, so make sure you subscribe to the channel for that update to see if I can beat my total from the last month in which they came through. So to wrap it all up, growth is volatile but full of steady potential, income is slow and steady, and the portfolio as a whole continues to creep upward. Between moonshots like Palantir, steady hands like VWRL, and dividend payers doing their quiet work, I'm happy with the direction things are heading. I'm inching ever closer to that next goal of a £2,000 portfolio, and I'm likely to hit that in the next few months. On to the awards for the month then. Starting with the award for best performing asset this month goes to Rigetti Computing with an outstanding 14.93% of gain. Will that continue next month? Unlikely, as it is quite a volatile stock, but I live in hope, and for this month, it takes home the prize. Now on to the award for the worst performing asset this month, which goes to BAE Systems, with a loss this month of 2.97% and no dividends. Commiserations to BAE Systems. It's been a steady performer in my portfolio since I invested in April, so I'm not expecting it to be in this position next month. If you enjoyed this breakdown, feel free to give the video a like and subscribe for more monthly updates. It really helps grow the channel. If you're interested in a full year retrospective of my portfolio, feel free to check out this video on the right of the screen. I'll be back next month with new dividends, hopefully some new growth, and probably the same whimsy. Until then, keep it simple, keep it realistic, and keep it effortless.